Hey, Andrew Malcolm here, Mortgage HQ. Today we're talking about capital gains versus cash flow in 2022 and 2023. So what you've seen in the last couple of years is interest rates have gone down, and this has helped push house prices up. Now, in the last 10 years, house prices have just gone up and up and up and up, and it hasn't really been a trend that has stalled or gone down for a very long time. Now what we're seeing is interest rates going up, inflation's confusing the market, there's a lot of economic and property market confusion and pressure, so we're starting to see house price growth stall and even go down, and starting to hear deals of properties getting under contract far less for the price than the vendor might have been expecting. Even heard of one property that had an IVAL of 1.6 going under contract for less than 1.1 mil. So what we're seeing is home owners that are selling are having to face the reality that it's a buyer's market. And it's actually going into winter, going to probably get worse. There's a lot of new listings coming, so anyone that's got a bit of money is looking at the market and saying, when is the right time to buy? Well, my 2 cents on it is that at the moment it is a good time to start making offers. Lowball offers were laughed out of the room a couple years ago. At the moment, lowball offers are often the only offer, and you're able to negotiate long due diligence terms, you're able to negotiate much lower prices, and then you can go and figure out the finance later and potentially even on sell. So you want to really understand your borrowing power, because things have changed. It used to be a lot easier to borrow money, especially with the low interest rates, because your repayment calculations were done at a much easier rate to pay. But what you're starting to see is cash flow is getting really hit, because interest rates have gone from around 2.29 up to 3.45 for those 1 years and even more. What you're starting to see now is people's repayments, even on interest only, has gone up by $300-400 for those expensive investment properties, because of the interest rate deductibility changes that have been brought in by Labor government. There's a lot of investment properties, especially when they're 100% geared, that are not cash flowing positively. So what does this mean? That investors are actually paying to own their properties, and that it's a negative cash flow situation, what is not an ideal scenario to be in. Now, why is that not a major concern? Well, it's not a major concern if you can afford it, because it's your capital gains play. Now, capital gains comes from owning a property in a good area for a long time, owning a good property, and by buying well. Even when your cash flow is being hit this year and next year because of the Labor government's changes and those interest rates going up, you're still going to be looking at your opportunity for capital gain. Contrary to common belief at the moment of never buying an investment that doesn't return straight away, you can envisage that in 2024, especially if there's a change in government, those rules might get reversed, and you're actually going to start seeing a lot more cash flow for your investment properties 2024 and beyond. What you've got to do is lock in your capital gains over the next 2 or 3 years through smart buying, and that might mean lowballing on offers. It's buying properties that have development and land bank potential from sellers that can't find any other buyers. So if you are a potential buyer of an investment property, now is the time to start getting ready. You want to have pre-approval so that you can have the confidence to start looking around, but you don't have to take action. You can take 6, 12, 18 months to do something. You really want to understand borrowing power, and then have the confidence and clarity to start making offers. And lowball offers are still helping the vendor. The person selling their property is often looking for any offer, and this is a free market. Some people are going to lose, some people are going to win. Why not you be the person that wins? If somebody is selling a property, they have to move, they made decisions about going to another city or developing their own property, they'll put themselves in a position where they have to meet the market much lower than expectations, especially if you use prices from 12 months ago. Don't miss this opportunity to buy low and potentially realize in 2 to 5 years, especially in 10 years, a much bigger gain than if you wait out this lull period. You go back to the 70s and 80s when there was high inflation. Some of these properties, I was looking at a property bought in 1986 for I think it was $36,000. that property is selling for over $1 million today, that is because of inflation, and it has been supported by the rates being what they are. So don't be discouraged by higher interest rates and negative cash flow. Understand what you can afford, anticipate that you might have to chip in, but keep that 10 to 20 year goal in the front of mind, and understand that now might not be the period for cash flow, but it is the opportunity for capital gain, because prices are stalling and most people don't understand the nominal increase in value, especially when interest rates have gone up a bit, but also inflation has gone up a lot. So any questions, let us know in the comments, and don't forget to subscribe.